Right, I'm going to record. There we go. Right, I hope everybody is well. So, right, leading on from obviously before Christmas, it it was very slow. We put some trades out on Christmas Eve in the morning. A couple of them triggered later in the afternoon, but obviously I posted in the group to, stay away, enjoy Christmas, have some time off. It's probably the one time of the year you get Christmas and you get Easter. And that's about it to have, a nice break. But obviously we're back on it, ready to get started. And yeah, should be good. So that is the plan. Um, so just to obviously, give everyone this expectation. I've got obviously the calendar up here. This is obviously how our December's gone. It's gone very well. I've been very happy. Although, it's been a bit slower. You've got to have these expectations. There is not a trade every day, and if someone is trying to sell you this dream, then it's not true. So you obviously need to be aware of this, and obviously, like I do this with every aspect of my, life. I manage expectations. I do it with people. I do it with, situations, you know, um, everything. So for example, the expectations you have on your friends is going to be a lot higher. Your close friends than potentially someone who you've only just met. But as long as you manage your expectation of anything, then you're obviously going to be in the right mindset no matter what. So I'm coming into this week with a realistic mindset that hopefully markets are going to hot up a bit. We've got obviously Monday, Tuesday should be a bit hot. Again, it's going to be slow for New Year's Eve. It's not going to be as slow, but obviously New Year's Eve is going to be slower. We're going to be probably not trading at all on New Year's Day. It's a bank holiday all over the world. There is no point. And then obviously, the second would just obviously try and snatch and grab obviously what we can. We've still got probably three to three and a half, solid days where we can capitalize from the markets, and that's exactly what we're going to do. Now, it's also going to be a bit tricky. Um, in regards to, because obviously the Christmas period was relatively, slow. We obviously had a few people trading Boxing Day, and markets were okay. Gold, carried on ticking up to the upside. But obviously we're gonna have to wait. I wouldn't suggest ever. This is one thing I do not suggest. Don't trade Sunday evenings. One, spreads are crazy. Brokers really love it. They want us to be hooked and want us to, really wait for that 10 p.m. candle to hit 11 p.m. candle for gold. And then wham, we're in, and obviously we're entering here. We're trying to buy, but actually we've entered up here. And there's obviously gapping, there's manipulation, everything. So one thing that I, say is do not trade, Sunday evenings. It's one thing that I stopped doing probably pretty early, probably after about a year and a half, before I got, hung on everything. But yeah, so stay away. We obviously want to see what market's going to do during Asia, and then we can try and capitalize on that. Yeah, let's wait and see. But very happy. We haven't had a losing day. As you can see here, overall in December, we've had a couple slow days, but we haven't had a losing day. So it's very tricky to kind of go through anything. So get your questions ready. I will go through what I can. I'll go through obviously what I'm looking at, and then but make sure you start to get your questions into the chat, and I'm happy to answer anyone's questions at all. Like always, I will answer anything in that chat. So yeah, let's have a look. Starting off with obviously, what we've got this, week in regards to what can we expect. All right, so Monday, not a lot of news. We'll obviously go through the charts in a bit, so do not worry about that at all. Tuesday again, not a lot of news either. We've got some FOMC meeting minutes Tuesday night, but that's not going to really impact us too much. Because we shouldn't and probably won't be in a trade around that. One thing that I like to do, and everybody in the inner circle will realize this is, I will trade around news events, and even if we've got a trade open, it will be a position where we're comfortable, So one thing that I do not get caught on ever is these crazy moves. Where it's like a 100 pip drop or a 100 pip pump, I don't get caught out. One, because, I've gone through my era of, gambling. I know it's been hyped up by a few of the US traders at the moment where it's like, yeah, non-farm payroll, let's go, interest rate decision, let's go, we're going to go all in. But if you want to trade like that, then you honestly might as well go to a casino and choose red or black, because that's the kind of that's the kind of message that you're putting out there. Whereas obviously I like to do things a bit more calculated. I've got a very, very institutional background in regards to how I've been, who I've obviously invested in to give me their, knowledge. I, have had lots of meetings with hedge fund owners, because, they're the guys who I really want to just drain their brains. And although it's very, very, very expensive, it's an investment that I put into me, that I can then portray to everybody else. And obviously hopefully 2026 will be an epic year. We've really, really managed to fine tune everything this last kind of month and a half, which I'm really, really happy with. And yeah, it's very, very exciting to move into 2026 into the position that we are in, which is epic. We've got this Copier, which is up about 26%, at the moment. We've obviously got, very, very comfortable, fluid trades. I've really, really simplified everything. So yeah, hopefully what I'm going to do as well is add to my course. I'm going to tweak it slightly, because I did a bit of a generic beginner based course. I did do it slightly differently, where I, set everything up, but I'm going to really, really probably fine tune it a bit. I just need to work out the best way how, because obviously I do utilize, fundamentals a lot more than a lot more than anybody else. And obviously that's how we can kind of make sure that we're in the right direction all the time. So moving on to New Year's Eve, Wednesday, we do have some data later on. However, if you look at everything's sort of closing up early, but obviously we do have some data in the afternoon. So I did make not a mistake, because I was happy. I enjoyed my Christmas Eve. I am out for dinner pretty early on New Year's Eve, so I'm going to make sure that I am make sure that I am um yeah, trying to be, reasonable. So we'll see where, markets are. But Wednesday lunchtime is obviously when the only bit of jobs data, and we've obviously got some Chicago PMI too. Chicago PMI is very, very low. So how PMI works is, as a rule, it's expected 39.5. Above anything above 50 is an expanding economy. Anything below is de despanding, deflating. But that's a very, very generic way of looking at it. But the jobs data is what's going to be important here. It's supposed to be getting a bit worse. But obviously let's wait and see. We did have a bit of light at the end of the tunnel for the US dollar coming into Christmas, but not enough to kind of change the overall direction of it. So. And then, Thursday, waste of time. Enjoy, or well, try and enjoy a hangover as much as you can, but chill out. Don't trade. Don't be tempted. Just enjoy it. And then obviously, we will come back on Friday to obviously see what we can um, get out of it. We've only really got, Switzerland, but yeah, everything else. We've got some dollar. HPI data, and a few bits of data. We've got some manufacturing data too for the dollar, So there's enough going on for obviously the last week of the, year. But everyone, we're trying to get ready, trying to get out the markets as much as we can, and then hit January absolutely flying. We've actually been. We've actually got it right in December, and obviously it's been slow. So I cannot wait for markets to obviously hot up, and we can really really start capitalizing on some good moves here. So looking into the US dollar, all right. I've got this on the 4 hour. We obviously had a very, very slow kind of finish. If you look here, I think Tuesday all the way through to Friday, we were stuck in this consolidation zone here. If you look how small the value was, that was what we were obviously trapped in. It wasn't really moving anyway. So anywhere, so anyone in any other group, which is, busting out trade after trade after trade, you're going to be capitalizing on about pips, 5 pips to 10 pips. It's not worth it. So we obviously want to make sure that we're capturing what is happening here. And, we're obviously capturing it in the right place, very, very calm, calculated. And then, yeah, we can obviously make sure that we really, really benefit from it. So, dollar holding up around 98. It's not looking like it's dropping a bit more. I mean, I'm going to hazard a guess during Asia that we might come up and come down and test this area here. I can't see how, anything's gonna change. But I'd love to wake up tomorrow and the dollar is around this area here. One thing that I obviously am trying to obviously, make sure everyone understands is one thing that I want to clear from everyone's brain. When you switch on a chart and you're obviously wondering which way it's gonna go, and you've got an open mind where you could trade it anyway. All right, you could trade it anyway. You could trade it up, down. I want to cut that out. All right, I want you. I've added in some very, very, some simple things here. We've got the 50 EMA and the 200 here. All right. All I want you to utilize this on is just purely, if the 50 is below 200 and if dollar is trending to the downside, all you are looking to do is look for the highest place to sell the dollar. That's it. We're not looking to buy. We're just looking to, sell it. All right. Yes, we can obviously implement some other kind of, things too, where, if it's very, very over kind of bought, then we can obviously look into, once it's in that region, we can obviously look into buying the US dollar temporarily if it all, lines up. But obviously, as a rule of thumb, and I think it's going to cut out a lot of losing trades, is, for example, if we were going to look to enter a trade, right now, right? Say we're going to look at euro, all right? We come onto the dollar chart, can see that dollar is clearly trending to the downside here until the dollar breaks back above 95, 98, 500. That's when we would obviously look to change our kind of, region here because we've got our, lower highs here. All right, as soon as it breaks, it's trying to make it very, very easy. All right, that is when we would change our tack. Now, for example, if we're looking into euro, all right, we obviously know the dollar is trending to the downside, so we want to look for the lowest place to buy it, all right, to buy euro here, all right. So we're going to be looking into, and obviously this is one thing that I will be going into a lot more detail. There's a couple of regions here, depending on obviously how, much risk, you want to take, and then you could, for example, hypothetically have, say, this area here. Yeah. All right, three areas. This one here, high risk, because it's not got to drop much. This one here, slightly, lower risk. And obviously this one here would be your, complete lowest risk. Yeah. All right. So, that's what we're kind of, looking at here. And obviously that's what we are, wanting to kind of capitalize on. So that is, yeah, but very, very, very basic rather than what everyone else is going to be trying to do here, right? Is that they're going to be looking at this thinking, right, price is rejected here. We're going to draw a box here and we're going to be looking to kind of, sell from here. Not looking at the overall picture. You don't have to understand everything. Everyone here knows what a downtrend is and what an uptrend is. All right. So why anyone would be trying to buy from here is crazy. Gold's exactly the same. All right. You can look for gold here. You can think, right, you know what? Well, gold is, flying at the moment, but we're going to be wanting to, right, where can we buy gold from? You trying to sell gold here is crazy, right? Gold is at all-time highs. It's never been in this area, so it doesn't matter how we predict a price, right? It's never been here before. All right, and this happens with gold time and time again. And all that ends up happening is everyone's trying to catch this, you know, top here. And all that ends up happening is you're playing into everyone's hands because, you know, what obviously bigger, funds do is they look at the value, like is it worth us buying gold right now? Is there more room to the upside? And yes, they got their 20 analysts working all this out. But if the retail market is trying to drive it down here, of course, they're going to be like, yes, you know what? Rather than buying more gold at 44, 4,500, we're going to be buying it at 4,300, and then obviously they load up once they come in, takes everyone out. So we look at it differently. We're obviously looking at candle support distance. They are looking at, is it worth it? Is there value there? Are they going to make money from it? So you really have to try and understand it and make sure that you're understanding it from this point of view. Um, so yeah, that's obviously what we are. That's how obviously I look at the market slightly differently. Um, to how how everyone else looks at it. So the other thing to take a note of at the moment is yields. All right. Now, yields is the big money. All right, coming in now because interest rates have dropped. It means that it's government bonds, US bonds are a bit less attractive for big money to come in because you're getting obviously less, for the bonds that obviously you're purchasing. So the lower the price of bonds, that's going to drop the price of the US dollar. All right. So US 10Y, have that open. You don't have to, study it, understand it. Just glance at it every day. All right. On a slightly uh, higher time frame because this is going to help you, help kind of guide you in regards to is it worth buying the US dollar, right now. And anyone who's trying to understand how institutions work. Um, this is probably the best chart to obviously understand what they're doing, because if the US dollar is worth it, yields are going to be flying. All right. If it's not worth it, yields are going to be dropping. Now, we've obviously marked this box of consolidation here. So we obviously want to, yeah, see obviously what is happening here. Is it going to drop? I think it might. If this obviously drops out of this consolidation box here, then we do know that dollar is heading to the, downside. Now, I know that, how I'm speaking, it's going to obviously maybe seem a bit, foreign or a bit complicated to, some people, but obviously what you've got to understand is you've got to try and find your, niche in looking at the market from another direction. If everyone's here, staring at something, at this, one dimensional chart and expecting, right, you know what, we've got this double top or, third touch on a trend line or a head and shoulders, whatever. If everyone's looking like this, if you just tilt yourself slightly and look at the obviously the overall picture, what is happening, behind everything, to obviously make these things happen, then it's going to give you that tiny, tiny bit of an extra edge. And obviously, hopefully, it's going to obviously help to, it's going to help you to yeah, really, really have that advantage over, 99% of the, markets. Because all we can really hope to do is just, ride the waves of, whatever is happening. But, as always, we want to make sure we know which direction the waves are coming. And then we want to obviously wait for those waves to come, and like a wave, it's got to, load up. And obviously that's where, you will find lots of charts will drop before they do this. And obviously everyone's entering here. And obviously that's why they drop because, the big, guys here, they obviously know that they want to be entering here. All right. So they can kind of play around with what, markets look like to kind of lure us all in, all of us in, bang, 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 bang. And then obviously once they're happy, once they think they're going to get, value for obviously what they're buying, they then come in, swoop in, take over from everyone, and then wham, we're obviously all there then wondering, oh, well, we got the direction right, but, you know, it just stopped us out, or, well, obviously everyone's going to be, say for example, we're on, I don't know, AUD, USD here, right? We get this nice bearish candle here. All right, we're going to ignore the fact that this is one big uptrend here. All right, everyone's starts to sell here. All right, sell heavy, and they let it go. But then what ends up happening is once they are happy with the price, they think they're going to be getting, value for their Australian dollar against the US dollar, you will see price even quicker climb higher. And that's why, even this, for example, look how slow this price here has, moved down compared to how quick it's moved up. Again, look how slow it's moved down compared to how quick it's moved up. All right, really, really try and look at everything from a different angle. And obviously, yeah, you're going to have a huge, advantage. And obviously, anyone who's in the inner, circle knows that that's my job. I'm going to be the one, who's obviously looking at this, identifying it, and then explaining it. So hopefully, over time, because obviously we go live every single day, Monday to Friday at 8. We obviously, I'm hoping over time, whether it's a month, whether it's 2 months, 3 months, 4 months, 6 months, I can guarantee if any of the guys in the inner, circle stay in the channel for 12 months. This time, next year, there will be, a different gravy compared to everybody else. And obviously, that's my goal. Um, right. Does anyone have any questions at all? Any questions at all? Um, seen some. So Tom has seen something. Put your entry where everyone else puts their stop loss. Yes, and kind of no, because that does happen, but that doesn't always happen. But yes, you're always going to be kind of safer. Like if I was looking here, you know, but then we're going to have for example gold here. All right, we're going to have a lot of people taking that gamble to try to sell it, and you might end up with something like this happen. All right, that is what was trying here. Price obviously came down to this area and then obviously took over. All right, it's tried twice, and I think even on Christmas Eve, if I just get rid of these blue lines, even on Christmas Eve. Um, it did trigger our entry, but we obviously didn't enter, but obviously it triggered our entry. I think this was Christmas Eve. Yeah, three here. It was too late. I'd obviously had enough, but obviously this was where I think our entry area was actually here, right? And our stop loss was obviously just below. I think our stop loss was in this area here. So it didn't even tap our, stop loss. It came close, but didn't tap. But obviously, you can see this here. All right. What is this candle doing here? All right. It's trying to make, everyone's looking at this candle here thinking, you know what? There was heavy support here. You know what? This one's broken. Do you know what's happened on this candle? It's retested. It's going to the downside. Sell, sell, sell. What ends up happening 4 candles later? This happens. All right, everyone stopped out. Or they're then, classic retail trick. They then that hold or keep their stop losses open, and it just keeps climbing and climbing and climbing. All right, so just this is one thing that I'm gonna be working on heavy. I do have another meeting with the guy. I had a meeting in Dubai. I've booked in another one for the end of January, so that's going to be good as well. And obviously, I want to go into even more because he went into a lot of detail on this and obviously how it works, and obviously looking at things as value for money. And I want to now ask him about how do you look for value for money. So obviously that's one thing that I'm going to look into. iPhone 2. Not sure who this is, but obviously iPhone 2. Hi, mate. Been following your trades. Recently, I've been wondering why you open three positions when you usually close all trades out at the same time. It's just my habit. I just like having three. I prefer having three trades at 12.5 lots than obviously one trade at say 37 lots. It's just my brain, like it more. Plus, yeah, it does give me a bit of that, flexibility. I haven't really had an opportunity because markets haven't been that crazy. We recently to obviously let one run. But obviously, yes, it means if I've got my three positions here and they're all in profit, I can close out to probably be happy, move this one to break even, and then let it run. So it just it's just my own kind of personal thing. It gives me a bit of flexibility. That's all. Skid. Brilliant insight as always, Dan. Does the 4 hour time frame give you the best overall idea of how the market is moving? So daily outlook. So if you want an intraday trade, and that's different to scalping, it's different to swing. But I'm finding at the moment the 2 hour is giving me a good intraday idea of obviously what's happening. So that's why I've been utilizing it a lot more because I'm an intraday trader. I'm not a scalper. I'm not swing. I do like to, I've had many sleepless nights trading, or I've had trades open. I've been waking up at, 2 in the morning, like, oh my God, you know, um, I don't want that anymore. So I do tend to come like 4, 5. If the trade's no good, I will close it and look for a position. Tomorrow. So yeah. Um, Paul, thank you. Great Christmas with the family. I hope you had a great one too. Yeah, yeah. I hope that everyone's obviously had a brilliant Christmas. Yep, mine's been very, very chill. I've been setting up a gaming computer for my daughter. So obviously, I'm obviously used to Apple. So it's just getting my head back into that Windows groove. So yeah. Does anyone have any more questions? Any more for any more? Any more for any more? Come on, someone must have a question. There we go. Chris has popped up. Is there a quick way to open 3 trades at the same time, at the same level? So how I've been, setting up the trades, and obviously I'll give you an example. So, say hypothetically, we obviously wake up prices here, and we're looking to buy GBP USD from here, or say, we're looking to buy from here. All right. Normally, everyone's got time. All right. So all I would do is do a buy, limit, and or a sell limit, and then you can obviously set them all at that price. So yeah, that is what I would do. But no, there's obviously a lot of options on MT5 where closing out. There's bulk operations where you can close everything out if you've got more than one. There's also something that I've looked into previously, which I haven't really wanted to use. There is a company called Magic Keys. Now you've got to be trading on a laptop, and you've got to have yeah, you just it's this little keypad, and it's like one click will obviously enter the trades, so it's a lot quicker. Someone's put here Trade Utility Pro is tools that can be used for multiple trades same time. Great tools. Yeah, I haven't heard of them, but yeah. This is for MT5 only, so thank you for that. Appreciate it. Tom, MT5 one click trading. Yeah. So, there's plenty of ways to don't do it. It isn't something that I've really, looked into. You've got to think about it in regards to, sometimes it goes with you, and sometimes it goes against you. But obviously if you're manually, and obviously you got one entry here, and then you go to enter again and again, and chances are every single time you're going to go into a bit of drawdown. So that's why I've never really looked at it. I always find, lots of times if you're entering 3 trades, they do tend to give you a bit more of an advantage. Ian, hi Dan. I am new to your group. I was just wondering a bit about your journey into trading, where it all started. What was your biggest lessons you've learned? Well, I've gone through a lot of this. I'll go through a bit of it now. That's no problem. So obviously, I started trading. Um, so I always had like stocks, very 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 small. I enjoyed trading stocks. My dad used to trade stocks. My granddad's, so obviously I like stocks. Um, and then I just was watching YouTube randomly, and I found a course, and I then got into penny stocks, which I hated. It was too volatile. It's more risky than trading, the craziest crypto, because it's all small cap companies. It's very, very manipulated. So then I had a friend who was trading, forex, and I joined this WhatsApp group, this was about 9 years ago. 9 years ago, 10 years ago, probably longer, probably 12 years ago. But yeah, I'd started to do that. And then they were okay. It was pretty basic stuff, like most of the market is now, where it's all three touch or double tops, double bottoms. I wasn't really, it was more scalping too. Then I paid about 5 grand for a 2 day course. I did that in London. And then yeah, just slowly I then kind of worked out that look, how trading works is it kind of takes you probably about 6 months, if I'm being honest, to kind of learn everything how it works. But then it's putting that into practice, and obviously one thing that I'd like to do, because I made so many mistakes. I mean, I probably lost a good 100 grand, in the first sort of 4 years. And then it wasn't until I lost that and very, very lucky I met a guy who I meet him every quarter. He's, 70 years old. He's an ex-hedge fund trader. He was actually a customer from my old company, and I just got chatting to him, and he told me what he did, dragged me in, and he explained the kind of psychology, and obviously that's how it's grown, into obviously what it is now, and obviously I started trading a big account probably about 5 years ago, and it's been, what I like to do is I'm trying to, I'm 40, so I try and gear up my trading to where I want it to be, where I've got optimal freedom. And then, I'm not chasing, so I don't want to be ball and chain tied to a laptop. But obviously, this call's going to end. I could go on for hours and hours. I've got so many stories. I've made every mistake out there, and obviously, that's where we're kind of growing. And obviously, yeah, molding into something where I think everyone's going to be very